Welcome traders, this is Chris Buss with Traders Profit Compass. Today I wanted to zoom in on gold and silver, and I don't think you can trade the metals without doing a careful analysis of the US dollar. They've been trading in lockstep together for quite a while, so let's spend some time here looking at the dollar and see what we can figure out. This is a daily chart of the US dollar index. We had been watching this saucered bottom with this well-defined neckline here at 93.5. We got the breakout above the declining 50, and we've got an impulsive move higher over the past week. I think someone said it's the best week for the dollar since April. And if you'll recall, in recent blog posts and videos, I've talked about the record short positioning in the dollar. Everybody and their brother has been short the dollar, and that's been the right trade. From back here, you can see the sharp decline in the dollar. So those traders have obviously been on the right side of the trade. But with anything, if you overstay your welcome, then you quickly become on the wrong side of the trade. And I've been following the short exposure in the dollar. And with this breakout, I think what you're going to start seeing, if we haven't seen it already, is a short squeeze, where the higher the dollar goes, all the people that are short have to cover, which of course is rocket fuel to the move. So just from a technical standpoint, I think the dollar has an open path through this thin zone up to 96. Whether it can clear the 200, I'm not prepared to say. We'll just have to see if and when it gets there. But I think from a technical standpoint and a positioning standpoint, counting on the dollar to rise here is has the odds in its favor. Could it reverse and go down and do a back test of this neckline? Sure, anything can happen. But as far as the indicators go, we've got a rising RSI, has broken above 50, and we've got an increasing PPO momentum that is now just crossing the zero line, which puts it in bullish territory. So from a short-term perspective, I think the dollar has room to go higher. Now here is the tradable dollar ETF, which is UUP on the 60-minute scale. And we had this trading range between 24.90 and 25.30 that we've just broken out of. You can see on the volume over price profile, we are right on the verge of entering a sizable void where price fell so quickly, there weren't a lot of trades in here. So now on the way back up, if price can punch through 25.60, it has a relatively open path up here to between 26 and 26.20 before it runs into more significant overhead resistance. So even on the lower time frames, I think it looks good. Good chances that the dollar will advance. Moving on to the euro, which is approximately 62 or 63% of the dollar index. We had made an observation in weeks past of this significant downtrend resistance line that the euro US dollar pair was at. And we had made mention of this consolidation area, and it has since broken down. Now, if you'll notice, there isn't a lot of support for the euro till it gets down here into the 114, 113 and a half area. So again, if traders are getting out of the euro, by extension, that means that the dollar is strengthening. So here is another factor. This rejection off of this downtrend line is bearish for the euro and bullish for the dollar. And I would expect the euro to come on down into this between 115 and 113.50 area. If you want to get more granular information on currencies, a really good source that I like is BK Asset Management. That's Kathy Lean and Boris Schlossberg. And you can find them at BK, I think it's bkassetmanagement.com. You can get on their free email list. And Kathy does regular currency outlooks. She's real good with the Fed Watch as well. Get on her email list, and she does a real good job summarizing the currency markets and the Fed. So I lean on her analysis quite a bit. I don't do a lot of trading in the currencies, but somebody said once that, if you get the US dollar right, everything else falls into line. And that's certainly true with the precious metals. If you know which way the dollar's going, you're going to have a much easier time trading the metals. So let's move on into gold. A week and a half ago, this was the breakout right here that we passed on. We wanted to see more. We were thinking this was a head fake, and that turned out to be right. On a break of 180, a lot of people in the group got short on that on a break of this lateral support and the 50. And now we've come down halfway in this range between 180 and say 170, 171. We're in this big volume over price void where there's not a lot of support. Just from a technical perspective, this would be an odd place for gold to just reverse, kind of out here in space with not a lot of technical support. I favor continued strength in the dollar and for gold to fall down into this 171, 170 area, which will be a key spot. I think you should alarm that to be ready for either a potential bounce or more of a breakdown, because I think either one is certainly possible at this point. And the reason I say that is there's not a ton of support at this 171 level. Here's where the shelf is right here, and you can see that. But from a bigger perspective, this is still a volume over price void where there's not a ton of technical support. And we see where the 200 comes in down at 164. So I think we come down here to 171, 170. I wouldn't be surprised to see a baby bounce or a consolidation here. But if that breaks, I think you're going to see a quick move to the 200, possibly even down to 160. And number one, that would be a great trade to be in if that were to break. Very objective level there that we can shoot against. Also, if price makes it down into this zone, we'll have a low risk long going the other way, because I am bullish on gold long term. It's just this short term, short squeeze in the dollar that is driving this price move. So if we can, whether you get short or not, that's irrelevant. That's how you want to trade it. But I think longer term, if we can anchor a long position down in this area, I think that'll be a great trade location for the long term. A nice position trade to look out 6 months, even longer, to anchor a position here between the 200 and this technical support level at 160, and then look for gold to go higher from there. Moving on to the gold miner index, GDX. We had made note of this key level of support here at 37. You should have an alarm there in your system. If 37 were to break, I think you're going to see a fast move down to 35 and then potentially down into this 32, 31 area. And that would be a significant move. But 37 is support until it isn't. So if gold turns around and the miners are here at support, we might be able to take a long position there. That's not my base case. My base case is for this to fall further, but we'll have to watch that 37 layer very carefully. I've got an alarm set in my system. You can see that RSI has rolled over down in the bearish area below 50, and the PPO has also rolled over down below the zero line. So those are favoring lower prices from here. We'll just have to see if it breaks this 37 layer to go down to test the 200 at 35 and possibly below. I went through and looked at some of the individual miners. This is Goldfield. Goldfields had been operating in this $2.50 trading range. It has since lost the 50 and lost the lower level of this trading range. You can see the big $3.50 void below. I'd like you to set an alarm like at 11:40, 11:25, something like that. Because if it loses this level, that's going to be a great short. Very objective level here. You've got maybe 50 cents of risk for a potential $3 move, a 6-to-1 risk reward. If gold breaks down and this moves into this big air pocket, it's going lower, and I think it'll go lower really fast. Kirkland Lake, tough location to take a trade rate right here, but it's below the support level at 50, and it's also below the 50 EMA. If you got a little bounce back up to 50, I think that would be a great place to initiate a short with a stop just above and then look for a move down to 44. I think that would be a nice trade. If it's down tomorrow, I would just let it go. We're kind of in no man's land here. But if you had a day of strength and that popped up to 50, I think you could hit it there. The indicators have rolled over, just like on Goldfields and everything else, down into the bearish area. So favoring lower prices and a move down to 44 where the 200 comes in right there. Newmont, in no man's land. I don't think you can do anything with it here. Um, I would alarm the 200 at 56, and I would alarm 64.5 up here at the 50, and those would be your objective trading levels. But right here, I don't think there's a trade to make. Rand Gold has already lost the 200, as you can see, and it's below all its fast moving averages. The level to watch is 112, and I'd like you to set an alarm in your system there. That is a big volume over price support level. I would expect it to hold here, but if it didn't, it's going to have a big problem because there's nothing down here, and that would likely, be a sign of bigger problems in the gold space. But I would alarm 112. You could also set an alarm here at the 200 at 121 if things all of a sudden turned around. You may want to take a long against the 200. I would favor waiting though and just see what gold does and see if this comes down to 112. I think that'd be a much stronger trade location, to be honest with you. Sandstorm Gold testing the 200 here at $8. If that were to break, I think you're looking at 650 rather quickly. We'll have to see if it holds. But if you set an alarm at $8, that's the objective location either way. And be ready to go if that were to break. So that's what I think about Sandstorm. Let's look at silver. It's actually in a much more precarious technical posture than gold. We can see that price dropped out of this symmetrical triangle. Fast rug pull to lose this uptrend line. And now it's dancing in between this 2050 and 2150. Set yourself an alarm at 2050. If it breaks below, it's moving into this big $3 void. I don't think the 200 will stop it if it breaks below. And I think you'd see a fast move down to $17.50, possibly even $16. And that would be a great location to anchor along if we got that move. I don't think there's a trade to make right here other than to watch it and see if it holds. If it consolidates a long time while the dollar is stabilizing or even possibly getting weaker, we may be able to take a long here. But like gold, I'm favoring lower because I'm favoring higher in the dollar. But that will be a great trade location to alarm in your system, 2050. It may see some support here at the 200, but I don't think it's going to hold because literally almost no trades in this $3 range. So I think it's going to drop really quickly. Pan American Silver sitting on support here at $30. If that were to break, I think you're going to see a move down to 27 at the 200. And if things get ugly, it may move all the way down to 22. I did see some institutional put buying in the name in recent weeks, looking out to November 30 puts. So there are some people positioning for a breakdown, but until you get it, I wouldn't go in on that. Just wait for the break. Alarm 30. And if it triggers, you can take the trade with a stop just above. And again, that's a great risk reward ratio. You've got $3 coming down to 27. And if that breaks, you got to move all the way down to 22. And you're only risking 50 cents or $1 on your stop. That would be a great risk reward on that. Wheat and precious metals, again, looks a lot like Pan American. I would be alarming 47 here. And if you get a break, you're coming down to 42 to test the 200. You can see, I didn't point it out on the other charts, but this had a big divergent high. Notice price was rising while momentum and RSI were declining. So that was an early tip-off that things were not all well under the surface. I wanted to go in and add a few charts on copper. It too is, dollar dependent. It too is coming out of a divergent high. You can see prices rising here, but momentum and RSI are waning. Price is sitting right on the 50 at 2.94. Even if you don't trade copper, it's a good risk on, risk off asset. If you see copper start falling, that's not going to be a great sign for, industrial demand, world growth, all that kind of stuff. It also tends to trade in line with the Chinese stock market, FXI. So you can track that as well. If you overlay copper and the FXI, it's remarkable the correlation between the two. So that may give you a heads up on China and Asian markets as well. But let's focus on this for the moment. Key off the 50 at 2.94. If you see 288 go, that's going to be really bad because we've got this big price void here that opens the door all the way down to 265. That would be a major risk off move. That would be CNBC. You'll be hearing it on financial media. So watch that. I think it's a key level. Looking at the copper miners, stocks that are really tied to copper, Freeport is one of them. Again, divergent high. Price was rising. Momentum and RSI were declining. Price is sitting right on the 50, which is at 14.68. I would set an alarm at 1580, and I would set an alarm just below the 50. If the 50 breaks, I think you're coming down here to 1350, which should be good support for a possible long. And then, of course, below that, we've got the 200 at 12. So if price recaptures 1580 from below, much ado about nothing. Copper's most likely rising. You could take it long there at that pivot and look for higher prices. But if it loses the 50, I think you're coming down to 1350 almost immediately. Southern Copper, another divergent high. RSI and PPO declining while price was rising. It has already lost the 50, and it's sitting on this support ledge near 43. I would alarm that level in your system if you're interested in trading it. If it loses 43, I think you're going to see almost a 10% pullback right away down here to the 200 at 39.5. I think that would be a decent trade to take on the breakdown. So set that alarm in your system and you should be ready to go. Okay, that's all I have on gold, silver, and copper. I hope you found it helpful. Watch the dollar next week. I've also shown in recent blog posts that equities do not like a rising dollar. And if the dollar finds strength, that should be a headwind, definitely for the metals, but also potentially for equities. So keep it a focus of what you're looking at during the day if you're actively trading the metals and the short time frames on equities. So that's all I have. I hope you like the content. If so, hit the like button. And if you're new to the channel, I'd appreciate you subscribing and hitting the alarm bell. And that way you'll get all my content whenever I publish new to YouTube. Also, over in the show notes are links to the blog and how to register for my blog content. So each and every time I publish new information, it'll be delivered directly to your inbox. And leave me some comments. Let me know how I can improve the content to meet your needs. That's what I'm looking to do. So anything that you can add will certainly be welcome and beneficial. This has been Chris Buss with Traders Profit Compass. See you next time.